After a few years of amazing returns for AI and tech stocks, we're seeing something unique happen. A shift away from that and into toilet paper and toothpaste companies? What's going on? Find out on this edition of the Video Market Update. So it's been an interesting year so far in the market, and we sit here early March and there's a lot of instability and uncertainty in the world. But one thing that has kind of fallen a little bit under the radar given all of the geopolitical events of the day is the large companies, sometimes referred to as the Magnificent Seven, and some of those names are Tesla and Facebook and Google, have performed either flat or very poor to this point in the year. You can see Amazon, Meta, Tesla, Microsoft, Nvidia not having a very strong start to the year. But then we shift and we look at Procter & Gamble, Coca-Cola, Pepsi, McKesson, Johnson & Johnson. Some of what people have often referred to as boring companies are doing quite well. You can see here that the S&P and the NASDAQ and even the Dow so far in early March are either flat or negative for the year, or some of these boring companies are up, double digits. So why is that? I think it's a couple of things. And first, let me say, none of these are recommendations for what you should be buying or what you should be selling. This is just information only. But when you look, a lot of these, quote, boring companies have been overlooked for a number of years. And so now valuations look good, price to earnings look good, and so money is going there. I think you would also have to say another reason is that people are looking and saying, well, the world is a little unstable. Maybe people are starting to pull back a little, right? We understand with discretionary, which is extra money I have at the end of the month. Well, these stocks are all and companies are all considered consumer staples. These are things I have to have. I have to have toothpaste and toilet paper. And for many people, soda, right? These are the things that we essentially don't want, but we need. And you start to see these do well when people are worried about the economy overall. So is this just a sector shift? Now, what's interesting is it doesn't appear that people are moving out of the market, going to cash or otherwise. They're just rotating from maybe a sector that was hot like tech and AI, maybe realizing some profits and then moving into consumer staples. I think that works if you're someone who's actively moving money and actively trading. But if you're a serious long-term investor, the goal is to buy good quality companies, good quality stocks, exchange traded funds, mutual funds, and hold those and make small adjustments along the way. Just as we've seen a boom in gold and silver, that may not be something you hold in your position you hold in your portfolio long term, but it may be something you hold for the next few years and have had for the last couple of years. So again, this isn't about let's all go sell everything and go right into consumer staples, because history tells us that still, as a long-term serious investor, diversification is best. But when you see a rotation so heavily out of one sector to another, it does make you kind of pay attention. So just wanted to bring that to you. Anything you are seeing, any questions you have, and I'm sure there are lots of them, please let me know. But if not, as always, I hope you make it a great week.